Hi, Mark Gordon with GoldenTicker.com on Wednesday, October 5th, 2011, and welcome to Trading the GLD. We're looking here at a weekly chart of the GLD. This is the gold ETF, Exchange Traded Fund, one of the most traded funds there is, and certainly riding the momentum of gold. And you can see on a weekly chart that we bottomed out here in mid-January and started a big run up here to 153, pulled back down here to 143.97, forming a nice channel, upper and lower channel lines here. In August, we really broke out and got way ahead of this channel up here in what I call rarefied air. And it was ripe for a correction. It hung up here for, what, 6 weeks. And then fell back into this channel. Now, what's interesting is when you draw a line along the lows here, we are still respecting this lower channel line. So this is an interesting idea to trade off of. And you can see that we've had 3 tight closes. Well, if we close this week in this area, it'll be 3 tight closes here. So it seems to be that there's some support coming in down at this area here. So using a weekly chart, we've established a trading idea. Now what I like to do is I like to drill down and go to the next level down, which will be a daily chart. Now looking at a daily chart of the GLD, we can see this this massive breakout here and a big run up here, sort of a double top here, got to 184.82 here, pulled back all the way down to 165, and then back up here to 185.85. Taking out the previous high, which was a bullish sign, but quickly pulled back here, getting support here at this red line, which is the 21-day moving average. Now, tried to rally back, couldn't do it, and then failed. And then, of course, a couple of weeks ago, we had this massive selling here, this gap down through the 50-day line, had support there for 1 day, thought we would stall there a little bit, didn't happen, and then completely broke down all the way down here to 154. Now, as I mentioned in the weekly chart, the trend line that had been established on the weekly chart is still in place here. And you can see it now as we get into the daily chart action. You can see the support here. Now, there's a couple ways to trade this. A very low risk trade would be to set a stop just under this low here of 155.27. Maybe just 10 cents under that, 155.17, and you're not risking too much, maybe just 2 points, and play that if that'll hold, which will mean that this established trend line will be in place, and that will hold. Another way would be to put a little bit under this one here at 154.09, giving it a little bit of room there. Another way to play this would be to, you can see this sort of a flag formation forming. If we do get a breakout above this trend line here, drawn along the tops here, that would be a breakout here. And you could get a run back up here to this red line, which is the 21-day moving average, which incidentally is falling very rapidly. Right now it's at the 168 level. So there's some possibilities here. What we're doing on a daily chart, though, is we're fighting a battle right around this green dotted line, which is the 100-day moving average. So gold is consolidating in this area with support down here. Now, I personally like to see a bit more of a trend established on a daily chart before I commit money. We've got basically a pattern here where we came up off of 154.19 and got up here. It was about the 162 level, and then pulled back here, didn't take out this low here, and then rallied up to 161.56. So we didn't get above this previous little peak here. So what we have is a lower high, and we have a higher low. So we're sort of just kind of moving back and forth here. I like to wait till a little better of a trend is established before I would go in. Now, another thing I do is even go down another level, down to the 60-minute chart. Now, going down into an hourly chart can give us more clues as to the direction and the momentum of the GLD. And the first thing I noticed here is that we have a bearish configuration of moving averages. And what I mean by that is that your 200-day moving average, this black dotted line, and your green dotted line here, which is the 100-day moving average, this is below the 200. This is not a good sign. And also the 50-day, which is this blue solid line, is below the 100. You like to see the opposite. You want to see the 50 above the 100 and the 100 above the 200 to show that that your moving averages are in an uptrend here. So this is one of the weaknesses I see. Now another weakness I see is we do have a sideways action here, but what happened here, here's that 162.29 I talked about, pulled back here to 155.56 and then rallied back up to 161.56, which did not take that out. So we did not establish a pattern of a higher high. Okay, so that means that we are technically not in an uptrend when you start analyzing the waves of this hourly chart here. And also the 155.27 slightly took out the 155.56. So really what you have, even though it looks like a sideways action, is a slight downtrend. So I don't like that either. So I would hold off on trading the GLD until we get a firm uptrend intact, or you may even want to short it if we get a good downtrend intact. So I call this holographic trading, and as you may know, a hologram is a bunch of small images that are exactly the same as the larger image that you see. So basically you can drill down into a stock and look at it through multiple time frames, almost like a hologram, which gives you great insights into the true direction of the movement of a stock, or in this case an exchange traded fund. And I'll be doing more of these videos to further explain this and to get you used to this type of trading. But I've found it really helpful, and it saved me a lot of money because you know, when you're committing money to a new position, you want to have the optimal entry point. And by drilling down into some of the quicker time frames like the hourly chart, you can really start to see things. So I hope this helps, and thanks for watching.